Hello, I'm Kevin Bullock, President and CEO of Signal Gold. We have operations in Eastern Canada. We are producing gold in Newfoundland, which we're winding down early next year. And we're really concentrating on developing our project called Goldboro in Nova Scotia, which is a high-grade, undeveloped open pit in the east coast of Canada.
Kevin, nice to see you again. It's been many years since I last spoke to you. I can see that that the years have been kind to you, sir.
Well, thank you very much. Likewise.
This is part of the Contrarian investment series that we're doing with Crux. So first of all, could I just kind of get your opinion on what you think a contrarian investment means and kind of where gold fits into that cycle?
Well, I kind of look at it after being through several of these phases, these ups and downs, cycles throughout the markets, as when people are climbing over each other and injuring each other to get through the exit door. That to me means that people will be doing that soon through the indoor to watch the new movie that's next. So to me, right now, everybody's scrambling to get out. There's the unknown is the most scary thing, and it's Halloween here, so spooky is the unknown. And you know, there's a lot of volatility in this market, and there's a lot of things that are unknown with wars and challenges and COVID and everything else that's going on in the world. So there's this disconnect between what's really going on and what really matters over the last decades to the price of gold and what's really happening to it. So I think that'll come back, and I think that we're ready for an uplift in the gold price and a strong final leg or final couple of legs to this bull gold market that I think we've been in for some time. This is a pause. So what it takes is a lot of determination and grit to be investing in a market like this, but it is the time to invest. We always look back in hindsight and say, man, I should have put some money in when I thought everything was falling apart. They're called cycles for a reason. They will continue.
I remember when I last met you, I think it was in December 2013, or it might have been December 2012. It was in London at one of those end-of-year conferences. It was Minds and Money, probably late in the year. And I just remember meeting you and meeting a bunch of other CEOs who were just stunned by the fact that the market had been so terrible in 2011 and then so bad in 2012, and it just got worse in 2013, and the valuations were so appallingly low that it was value destructive to find new ounces. You know, it was much easier to buy ounces. We're funny enough, we're almost at that point now where it's actually easier to buy ounces than it was before. And I thought it was I called it the low grade kind of the low grade club of these kind of stunned CEOs. You're not in that club at the moment. You know, you've got good grade on Goldboro, but valuations are almost at 2014 levels, aren't they, on an EV per ounce basis?
Yeah, I mean, it happens whereby, like my analogy, I mean, people just selling out. We get into tax loss selling this time of the year till the end of the year as well. People trying to get out for various reasons, and it just snowballs, and liquidity drops significantly in juniors. So you've got uninterested buyers and motivated sellers, and that drives the price down. And that'll reverse when the markets come back. Sometimes it's a new year for institutional funds to start getting back in, write off their losses, get back in at lower levels. People who sell now in tax loss selling to get back in the new year when they're allowed to take that loss, but get back into a company that has been significantly undervalued for what its true assets are. So I think, you know, as far as grade goes too, I think there's so many other items that are part of the profitability of a mine. There's grade, but there's hundreds of other things. So low grade, I would always ask people, you know, what would you prefer, a low grade mine or a high grade mine? And the answer always is high grade. And my comment always was, but you don't know anything else about it. It could be 1 meter of high grade, 1,000 meters deep, and you can't mine it. So it really is about geometric deposits and a bunch of other things. But all things being equal, high grade is very good, especially in open pit deposits, because that simply means your pit has been able to be driven down quite far. Your stripping ratio is probably higher than normal with high grade because it does drive it down to be more profitable open pitting than underground. So, and it's a much easier start if your ore body surfaces or is near surface without too much pre-stripping. So fortunately, we're in a first world. We've got an anticlinal system that breaks out its surface. It's a very high grade open pit mine, and therefore ticks all the boxes for permitting and jurisdiction and mining, except for the strip ratio, which is an 8-to-1 strip. So there's a lot of waste that we have to deal with, a lot of waste rock, but that's simply because the grade of the deposit allows the open pits to be brought down to I believe it's a 260 meter depth in the west.
Yeah. And talking about permitting, you got a significant environmental permit in August.
Yes, we submitted our environmental assessment registration document, really truly believing we'd have one or two requests for further information, and it actually got approved with conditions the first pass. And we're the first ones to get that since Tukoi was received it several years ago, 5-6 years ago. So that was a big step for us, because once the environmental permit is received, the rest are a little easier in the sense that you're working towards something that's going to happen by doing all the things right, as opposed to is it going to happen. I mean, if it's cleared the environmentals, it's most likely going to go ahead.
So what next needs to happen for the project now that you've got the environmental?
We've got several things to do. The main things are the industrial approval, which is the approval to develop the mine, based on the receipt of the EARD approval. We now work towards industrial approval, which allows us to mine, and that takes things to a further level. 80% finished detailed engineering on some things in Nova Scotia. So being more technically sound on the work up front before starting and getting that permit. And there's also the fisheries offsetting. So in other words, any areas whereby we disturb land where we can't adjust. In other words, we can't move the deposit, it is where it is. There's other pieces of infrastructure that have to go in certain areas that will disrupt some wetlands. Compensation of those wetlands with other programs elsewhere is what's called a Schedule 2 amendment to offset the fisheries that any disturbance occurs. So we're working on those programs with various local groups and the local Mi'kmaq, who we work very closely with, First Nations, to look at offsetting programs for any areas that we are going to disturb. So that's the fisheries offsetting. That's the DFO, the Department of Fisheries, and that is actually a federal. The only federal portion of permitting we have to do is the fisheries offsetting.
And so, what does that mean in terms of your timeline in your planning for development? What's the overall timetable?
Yeah, they vary in ranges, and therefore you can't pinpoint exactly when it is. But we feel that we're determined to be shovel ready with all our permits in hand in March of 2024.
Okay.
So it's another year and a few months of final permitting and detailed engineering and long lead item orders. A lot of pre-permit work to be done, and then we should be able to start building in the second quarter of 2024.
Okay, good. There's of course, preparing for this interview, I kind of go through your news files, your news filings, and your presentation. And I think the big news from last week is the decision to suspend operations at Point Rousse, at Point Rousse, your mining operation, which has been contributing kind of 15 to 20,000 ounces per annum. And it's interesting that the share price response seems to be negative. Just looking at the share price graph, it seems to tick lower. I know you were talking about kind of tax loss selling, but it almost feels as if the market is taking that in a negative way. And yet I always talk to people and say, don't try and run a small operation while you're developing something big. Much better just concentrate on the big thing. So, how you think about it? Is it, have you closed it because you're just thinking about the bigger project and you want to have your management time on that, or what's the kind of the risk reward balance that you've analyzed here?
Yeah, partly it's that, and it's a number of things. One is that the mine life at Point Rousse operations really there was the Pine Cove pit, the original pit that had a mine life of 6 years, and that was extended to about 8. And then the decision was made to start mining some very small satellite deposits. They are extremely difficult to mine. However, we were able to make the first couple work. And we're not closing, we're actually winding down over time while we mine out this final Argyle satellite pit, which should generate $8 million of cash flow into about the end of January, February of next year. And we've decided not to continue developing the next deposit, which is a little satellite deposit called Staggertite. Because although it's a reserve, and we've stated that reserve, it's a 22-month mine life extension with about a 19 or 20-month payback. So the risk involved in something of spending money to develop and mining and hitting 100% of your plan, you still don't get anything back till the final 2 months. That is too high risk for a company who I believe, and analysts agree, 90% of our value is in Goldboro and less than 10% is at Point Rousse. So for the stock to react like it did by curtailing the production in Point Rousse down to a wind down and put on care and maintenance to ensure that there isn't risk to the company in developing Goldboro, really should, in my view, be a positive attribute. And I think it goes back to what I was saying earlier, whereby we have very, very low liquidity in this volatile environment. But people who were, or shareholders who were in the story for its production, would have sold without any support on the buy side. So we had very low volume with the shares going down. Yeah. I think they will, and they're going to work their way back up. But I truly believe we're a much stronger company, being able to focus on Goldboro and move that forward now that we've got the EARD done.
Thank you. And you talk about it. The Argyle has generated $8 million of cash. Is it going to be cash neutral as you kind of close it down, or are you going to be able to harvest some cash from these last few months?
It's actually going to generate another $8 million of cash as we mine the bottom of the pit, which is quite high grade.
Okay, misunderstood. Thank you. That's really useful. Well, you say you're a stronger company. Is that because you can focus now on Goldboro?
Yeah, I mean, look, it's very, very risky mining these satellite deposits, as you know. If there is any kind of issue whatsoever, whether it's self-inflicted or Mother Nature, there's no room to pivot. And, that can, as we've seen in the past, we had some water quality issues in our pit at Argyle. It stopped us being able to mine for a month because we were doing the right thing environmentally by treating the water. We never allowed any to be discharged. But that cost us $8 million. Because we were keeping a full staff and basically treating water as opposed to producing gold. We did keep producing. We fortunately had some low-grade stockpiles, so it didn't hit us as hard as it could have. But those are gone now. We've got a risky, operationally and financially risky project next, and we're deciding not to start it. Look at seeing if we can make it better. Looking at optimizing, looking at also to consider any strategic alternatives for our projects that are in Newfoundland and Labrador, because we really want to focus on Goldboro. And I'm sure that any potential investors for Goldboro, whether it be on the debt side or the equity side or existing shareholders, would want us to focus on Goldboro as well as we move forward and not be deterred by anything else. So we had a choice. We can try and make Staggertite work, high risk, end up with employees that can't get anything if the plan didn't go right, or we could generate this cash, put a proper financial plan in place to ensure proper retention and severance packages for everybody, pay off all of our contractors, etc., close it down properly, continue with our environmental ongoing upgrades, and concentrate on Goldboro. So that's the choice we made to protect the value for our employees that are even there.
Have you communicated all of this to your employees so that they're aware of the severance and the termination of employment opportunities?
Yeah, the group of senior management went out there to deliver the message face to face. We're not hiding from this. It's the right thing to do for the employees there. It's the right thing to do for us. It makes us a stronger company. So yes, it's all been relayed to the employees.
How robust was the discussion at the board level? Because that's a big decision, and you must have had some kind of culture of being a miner, having in the sense that there must have been a very strong ethos within the company to want to keep mining, and that strategic. What was the word you used? The pivot. There must have been a pretty robust discussion or series of discussions at the board level.
Absolutely. We discuss everything with the board, and we don't make decisions without their backing and their support. So when we discussed what I've just explained to you, such a risky operation that could affect us on the negative side, and on the positive side wasn't extremely encouraging for a short mine life. The reality is it's the mine life. 22 months. I mean, it's less than 2 years.
Yeah.
People don't start mines that unless they're going to go for 8 years plus.
Yeah.
Now, granted, we have infrastructure bought and paid for, but we now have another project that we need to concentrate on. And if we had any glitches to the plan in the next 22 months, such a short time frame, and you can't pivot within that because they're such small pits, it could really hurt the company. So
yeah.
This was explained to the board. We had several long discussions about it, and everybody agreed. It's unanimous. It's the right thing to do for the company going forward. It makes us stronger, and we can treat everybody right in Newfoundland.
And are there employment opportunities in Nova Scotia from the pool of talent that you'd be working with in Newfoundland?
Unfortunately, not immediately because of the time frame we just went through of getting our final permits to be shovel ready. So there's very little available within the company. But having said that, we are in tough times market wise, raising money. But it's a great market for employees to find other jobs. As everybody knows, it's a tough go right now trying to find people. So these experienced people with mining in the area and other things going on, and Marathon's building their gold mine in Newfoundland and need people. I can't imagine that these employees can't find work to continue. So, I think it's the best we can do for them. Help them transition into something else, and see if we can't find a way to create value with the assets that are there. I mean, quite honestly, we've got the largest deep water port in northern Newfoundland that we own right at the site. You could actually convey concentrate right into the mill from a boat on a conveyor. We do ship out some of our waste annually for fill material that we get a royalty on. So the actual asset itself, with a significant tailings facility for a long life, someone else with ore in the area, or someone with concentrate elsewhere that wants to ship there, I don't think the infrastructure will stop working. I think there will be something done. I think we will get value out of the infrastructure.
Okay, so you maintain all of that infrastructure, and you've got the optionality to do some kind of business venture with that, some value creation strategy.
Correct. I mean, we are looking at all strategic alternatives to maximize the value, and these assets are definitely worth something. The tailings facility alone, to build something that would have a 5+ year capacity for tailings with hard walls like our tailings is, would take 3 years of permitting and cost $50 million. So it's a liability if nothing's happening with it, but it's a huge asset if somebody has ore that they want to put through it, or concentrate. So there's some sort of strategy there that someone's going to recognize, and that's why we're winding down, keeping it right on care and maintenance, and looking at these alternatives.
Thank you. That's really interesting. Now, you used a phrase earlier, which was when people are rushing out the doors and the kind of the pandemonium to try and get out of the cinema, but they want to come back in to watch another movie. What do you see as being the any kind of macro catalyst? What do you look for to kind of get a feel that other people are wanting to watch this movie again? Is it macro, or is it the conversations you're having about your project?
No, I think it's macro. We're as we talked about offline earlier. I mean, our share price is probably a third of what it was at its high, but so is everybody else, and that's macro. So it's what I would like to see, and what I'm hoping the perfect storm for us would be, because we're not going to be building for a year and not producing for 3, is that we'll have a rollover in cost escalation. This inflation that we're seeing, and cost inflation on building things and operating things, can't continue forever. And if it does, well, then something has to break on the revenue side. Gold price has to go up, or whatever. So I think what we'll see as we have heavier inflationary measures that are happening, that the gold price will respond by going up. And then we may have, as the gold price is going up, the trailing numbers of costs might be rolling over. And that might be the perfect time when we hit the button to build, with costs rolling over and gold being at a very strong price. But what we do as well is we look at this. We know it's going to be a 10-year plus mine life. We think it's going to be much more than that when we include the underground and other exploration. That this has to operate at higher prices of gold and has to operate at lower prices of gold. So, on the testing this at $1,300 US gold, it still works, and that's the benefit of having such a high grade deposit.
I always feel that the best projects will attract capital.
100%, and to build something when times are not good, it's always the same. When times are good, you can get the money to build something, and then these average things get built, and by the time they're producing, maybe prices are back down. It always should be done the other way around, but it's always difficult to get money when the price of the commodities are down. But it's when you should build it.
What's your support from the institutions? Are you getting funds to back you in the project?
We are, and we don't have a huge institutional ownership. But we've built it up from 3 years ago when we started with our new aggressive approach, from 7% institutional ownership to over 25 now, and a lot of interest in the Goldboro project, which is why we're focusing on that. So I think that'll continue to increase, and we'll have more institutional holders in there. They know the value, looking at feasibility studies and everything about this project with a $350 million NPV discounted at 5%. That this is on sale at the moment. It's a yard sale, and things will turn. And so you can look at just management alone of this company. When we're not blacked out, which is quite often, we're buying on the market as well. It's something we believe in. It's something that our institutional holders believe in. And right now we've got macro conditions that create, this volatility in the market, and liquidity is slim. So
this is the time when you should be buying, I guess. I mean, that's the thesis that we're working on. There are cycles, and when you should be buying the Edmund de Rothschild philosophy, kind of when there's blood on the streets, and that's the time to get in.
Yeah, I truly believe that. I mean, he's not the only one with comments like that, right? If you like something and you like the potential of it, and the price of the stock goes down, you don't get angry, you buy more, because nothing's changed about the project.
Yeah. Good. And do you have a crystal ball? Do you know when it's going to turn?
Nobody does. Nobody does. Everybody's correct. It's just their timing that's off. No, I have no idea. I would have said about 2 months ago, I would have said it's starting to turn, and maybe 3 months ago. And I think we'll have a great early new year. Now and it's a gut feeling. It's not based on anything. My guess is as good as any. I guess I'm thinking maybe it's next fall.
Wow. Okay. I mean, I when I look at the macro and I look at the pain that the tech sector is under, I mean, I saw this exactly the same 25 years ago, at the end of the 90s, when the NASDAQ just kind of exploded, and the NASDAQ peaked in 2001, and it was 2002. It was about 6 or 7 months later that the metal prices and the commodity stocks really started on that mega rally from 2000 T1 was, yes, it was helped by China joining the WTO, but the gold price pretty much led out of the gate, and I wonder whether we're at that point now. But
we could be, right? If you're trying to pick the highs and lows, whether you're investing in, or whether you're building something, you're not going to be right. But to have a sense of something about to happen, and knowing that it always does, that there are cycles. I remember back in 2001, I think it was, a group that I was involved with, we purchased the Macassa mine for $5 million, and everybody said we paid $6 million too much, and gold was $290 something an ounce, and we ended up pushing through with that project and turning that junior company into something called Kirkland Lake Gold, which then kept progressing to its sale just not long ago to Agnico Eagle for and that started with a $5 million purchase when everybody said gold's going off the map. That was contrarian for sure. And investing in today's market, whether it's turning now or whether it's turning next fall or sometime in between, it's going to turn.
And I mean, you've used words like contrarian, fire sale. What's the downside risk? Because this is always a play between risk reward, and we've talked about what the rewards might be, but how protected do you feel that the sector is, or the downside is for investors?
Well, there's very big downside, right? Because you could put all your apples into moving something forward, thinking things are going to change soon, and it takes an extra twice as long to actually be able to survive through that time and have the support of various shareholders or institutions that understand what you're doing and be able to survive if it does take longer is key, because you don't want to lose your main asset by being too aggressive based on your own crystal ball, because you're never going to be exactly right, and you got to be able to march through to when it does happen, whether it's sooner or later.
So how do you mitigate that? How do you plan for that? What's the discussion what's your philosophy on kind of timelines? And we don't know when the market's going to turn. Think you're going to be in production in 2026. How do you?
For us, it's to keep the interest in the company, and there's, in Canada, we have what's called flow through. We also have charity flow through, which money can be raised at quite a premium. So even when things are bad, there's that availability. And for us, we found 3 million ounces on the eastern half of our Goldboro project. The geophysical signature continues through the western half to another past producer called Dolliver Mountain. So there's 1.5 kilometers that doesn't have a single drill hole in it that we're going to drill starting next week, and that's using flow through funds. And that keeps that excitement. We talked earlier offline about the Lassonde curve, and when you're in that flat area of it trying to develop something and people lose interest, we're going to stick a wedge in that and create excitement, and that wedge is going to be drilling west of the current resource. So that to us is, I'm answering the question in a different way, but that's our plan, to keep excitement on the project while we're trying to develop it. But it also keeps excitement and keeps people waiting for those drill results, etc., if things take time for the market to turn around. So we've got, where's the best place to look for a gold mine is next to a large deposit or in the shadow of a headframe. We've got both with a geophysical signature. So that's going to be exciting as we drill that, and that drill will start turning on the 7th of November.
And if you've got 3 million ounces at 2 and a bit grams a ton, the hope is that you'll find another extension to that, and you can actually grow this into an even more significant resource base.
That's correct.
Great. Kevin, good luck with all the projects. Good luck with the wind down and the harvesting of the cash at Point Rousse. Really nice talking to you. Thank you very much.
Thanks. Great to see you again, Ron.